Good morning, everyone. Good morning, everyone. Let me welcome you to MedZone African Motives. Uh, we are going to do accounting grade 10 revision for a paper that was written in Limpopo province. For a paper that was written in Limpopo province in March 2025, 19 March 2025. So this paper was written in 19 March 2025. So last time we did the question one and question two of the very same question paper. So today I want us to finish off this question paper, whereby now we are going to look at question three and question four. We're going to look at question three and question four of the very same question paper. So let us be together from the start of this presentation to the end of it, good people. So without wasting much time, let's quickly go to question three and four. So that is that. So here is our question three, whereby we are going to look at journals. Question three, we are going to look at journals. As it says, the following information was taken from the records of Radaba traders with the owner Kagiso Radaba for July 2024. Radaba Traders sells a variety of goods at a profit of 50% on cost price. Goods are sold for cash and credit. So the goods are sold on cash basis and credit basis. So that is that. So required now 3.1, complete the following for July 2024. Our year end is July 2024. So 3.11 is cash receipt journal. So we are to do cash receipt journal. 3.12 debtors journal. 3.13 debtors allowance journal. So 3.2, it says mention two measures that should be implemented by the business before they can grant credit to customers. And 3.3, name two ways in which you can encourage debtors to pay their accounts on time. So that is that. So also we have a note which it says do not add the journals, do not close off journals. So we are now given the transactions on July 2024. So this is the transactions that you're going to work on from transaction 1 to transaction 20, from transaction 1 to transaction 28. That is that. So we are having these dates from this date, which is the 1st and to 21st. So without wasting time, let us attend to this question. Remember our 3.11, which is this one, we are asked to do cash receipt journal. So let us do it right now. So as our transaction, the first transaction that you're having here, it says cash sales per cash register roll. So we can see this do affect our cash receipt journal. This is our CRJ because we are going to receive what? This amount. So we are going to have a cash receipt journal. So the rule about this cash receipt journal is that it records all money received. It records all money received. That is the rule about the CRJ, cash receipt journal. It records all money receipts. Hope you get that very well. So that is that. So now as we are having this transaction and you are saying it do affect our cash receipt journal, it simply says this comes from cash register roll like we are told about. And we are going to have in our bank 12,300. And if we have sales column there, we are going to have it in 12,300 in the sales column. So that is that we are going to say, we are going to say this is going to go to bank. It is going to go to bank. column. It's going to go to bank column as how much? 12,300. And we are going to have sales column, whereby now we are going to have 12,300. So that is that. So like we are told that Radawat Reader sells variety of goods at a profit margin of 50% on the cost price. So that is a very important information. So now we are talking about now cost of sales calculation. We cannot do have sales without having the cost, how much it costs us to sell those goods. So of 12,800. So it means now we're going to say markup. We're going to have markup, which we have said is equal to 50% on cost. So now what we are going to say, we are going to say selling price. We are going to say selling price is equal to cost plus 50%. Because we have said, uh, 50% is on cost price. So meaning to say now we are going to say, how much. We always say our products or our production is 100% on cost. So meaning to say now we are going to say our cost, we are going to say cost, and then we are saying is equal to 12,300 divided by 1.5, which is now going to give us what? 8,200. Why are we saying 1.5? Because we are going to say cost is 100 plus 50. We're going to say 100 plus 50, which is going to give us 150, which is 1.5. Because I've said our products are always on 100% cost. We produce at 100%. So now we have this markup of 50. So selling price is cost plus markup. So we are saying our cost price is always what? 100. So that is that. So that is where we are saying 12,300 divided by a 1.5, which is our markup now. So it is going to give us our 8,200 as our cost. So it means now our cost price is equal to 8,200. Hope you get that straight. So that is that. So now, let us go now and try to get to our answers. As you can see now here, we have said this is what church register roll. Our document is what church register roll. On the first day, we have said we received this much, 12,300 on our analysis of receipt. So this is going to go into the bank as what? 12,300. And that 12,300, it was for goods that were sold. That is why under sales column, we are still going to show that as 12,300. How much it cost us to sell those goods? It cost us what? 8,200 that we've talked about. So make sure that you understand very well that where we don't have a column, where we don't have columns, you're going to have what? Sundry accounts. So we're given this column of bank sales and cost of sales as well as debtors control. So if we have any transaction that doesn't have a column of this given, we are going to record that under sundry accounts. So that is that. Can that be clear to you? So now let us go to another transaction. Let us go to another transaction that affects our church receipt journal. So that is that. So we are done with the first transaction of the first. So now let us come to on the 3. On the 3rd, it said bought rate in stock. So you can see once it said we bought, it means we paid. So it doesn't affect our cash receipts journal. It doesn't affect our cash receipt journal. Also sold goods on credit. 2, it doesn't affect our cash receipt journal, because cash receipt journal, we have said those are the money that we received. It's all about the money that we received, cash that we received. So on the 10, we return the goods to, each time we return goods to with cost price of 800, you can see once it says we are returning goods to, it doesn't say anything about our cash receipt channel. So now coming on the 15, the owner, K Radaba, increased his capital contribution with 50,000 by a direct deposit into the bank account of the business. So this is our CRJ. So it affects that because you're going to deposit the money into our account is a business. We've said even this one affect our cash reception. So this is on the 15 whereby we're saying owner. Here we are saying the owner invest. The owner invests money. The owner invests the money. It means now if the owner invests the money, he increases what? Capital. Increases what? Capital. Meaning the owner increases what? Capital. So it means now money is going to go into the bank. Money is going to go into the bank as what? As 50,000. So do we have a column for capital? We don't have. So we are going to say sundry of how much? Which is equal to capital. Like I've said, if ever we don't have column of a transaction, that goes into sundry accounts. So let us see how it was. So we have said the owner invests the money wherever he increases what capital, it goes into the bank. So that is 50,000. Then we go to sundry accounts because we don't have a capital column here. So we are saying the amount is 50,000 and our details now will be, it was for capital. That's the description of this amount. Hope we are together, good people. So now let us move on. So now we are moving on to another transaction. We are moving on to another transaction. So here we have said CRJ. Let us not forget here, even there is CRJ. So now we are moving on to another transaction that do affect our cash receipt journal. On the 17th, received 1,200 from K Jalas as part of payment of his account. Meaning K Gallis, J Gallis, sorry, it's our data. So he paid 1,200 as part of his account. So received 101, received the rent for July 2024 from the tenant. So the key did to go 2,200. So now let us try to find how we are going to treat that. We are saying it is on the 17th July. K Gallis pay how much? K Gallis on 17 pays this much, 1,200. This is a data pay again. So the money is going to go into bank as he pays us how much? 1,200. And then we're going to have what also? Debtors control. We're going to have debtors control. And we do have this a column of what? Of debtors control, which is 1,200. So because it reduces what he owes, because this is going to reduce what he owes on the 70. Also now we are saying we have another statement. You see K doc 2,200. It also says received 101, received the rent from July 2020 from the tenant K doc. So this is for rent now. We also have what? The rent received. You also have rent receipt on the very same day. Rent receipt, which is income end, which is income end of how much? Of 2,200. So it simply says the bank is going to receive this much. The bank is going to receive 2,200, and you're going to have a sundry because you don't have a column for rent. Then we'll have what? A sundry of how much? Of rent income. Of rent income. So this is what we are going to do. On the 17th, all this take place on 17. We receive this much of, which is 1,200 from our debtor J. Gallis as part of payment of his account. So we receive that money. So it means the money is going to go straight into our bank. So we receive from who? From our debtor. Also, that was for our data. Also, we received one, that the received number was what? 101. Also, on the very same day, we received the rent for July 20 from our tenant QD Cock of 2,200. So let's see how we will record that. Remember, we have said it is on the 17th. Here is our document number 101. On the 17th, we received this much. J. Gallis, which is our data, 1,200. So we do have data's control column. That is where we have this much. We receive this much, which is going, which is our data. So we are going to have it there on the analysis receipt, and then we have this on our data's control. So now we are going to take that money into a bank, but we are going to make sure that we add within that money of rent that we received, whereby now we're going to say 2,200 was for rent. So when you add 1,200 plus 2,200 of rent, we're going to have this in our bank, 3,400 in our bank. So that is that. So also you have to explain that what was this 2,200? This 2,200 was for rent. So we have to show that in our sundry account, you're going to have 2,200 for rent income. So when you add 1.2 plus 2,200, they will give this 3,400, which is going into our bank. So hope we understand this. So now let us move on to another transaction. Let us move on to another transaction. So now we are coming to 25th now. As we can see, or 23 is a credit note issued to H. Alma 675, cost price is 450. So this one doesn't affect our church receipt, but when you come to 25, you can see we received 45,000 from VBS Bank for a fixed deposit that matured. So this amount included interest of 3,800, and the amount was transferred directly into the bank account of Radaba Traders. So that is that. So let us try to see how we are going to treat this. How we are going to treat it. So we are saying it is on the 25th, and then we are saying this also to affect our church receipt journal, like we have said. We are given a total receipt. So our total receipt that we are given, total receipt, is how much? Is 45,000. This is this much from VBS Bank for a fixed deposit. Also, we are told that this amount includes what? The interest. So now how much is our interest? The interest is how much? 3,800. So we want the capital portion now. We want the capital portion. Capital portion is equal to, capital portion is going to be equal to 45,000 that minus that interest, 3,800, and that will give us 41,200. This is a capital portion, whereby now we are to subtract this interest from that amount for that we received from VBS Bank as a fixed deposit that matured. So fixed deposit, we have said, is 45,000, but it includes 3,800. So for us to get a fixed deposit now, a net fixed deposit of 41,200, that is when we subtract this interest that we told that it was included. So hope we get that straight. So now going to record that, that is where we're going to say 41,200. 41,200 now is going to go to fixed deposit. That is asset. And then 3,800 is going to go into interest income. So that is that. So now let us see how we are going to do the recording of this. So as you can see now, we are here on the documents BS 25. So details is VBS Bank. So we received this much, 45,000, which is going to go into our bank. But now we don't have what the fixed deposit column, where we have said that the capital portion, which is 41,200, which is this one. Now we are saying it goes into a sundry account. The amount is 41,200 and it was for fixed deposit after we've subtracted what the interest that was included. So also we are going to have what interest 3,800, which is for interest on fixed deposit. Also these should be under sundry account, because you don't have column for fixed deposit, you don't have column for interest on fixed deposit. So that is why we are to show them under the sundry accounts. Hope we are together on that. So now let us come to 28. On the 28th July, the transactions in the bank statement from ABBA Bank reflected the following: interest of 360 on a favorable bank balance. So here we are told that we have what? Interest, bank interest of how much? 360. So let us see how we'll treat that. Let's see how we'll treat that. So we are told that this also affect our cash receipt journal. So bank interest, we're told that is what? 360. So that is interest earned from the bank. This is what? Interest. And it's interest earned from bank. That is interest earned from the bank. So we are going to have bank. This money is going to go to bank as what? 360. And also you're going to have sundry, which is going to equal to interest income, because we've said we don't have a column for interest income. So this is how we're going to treat it. So as you can see, it is on the 28th, we have BS as our document. So it was on the 28th, we have a AWBA Bank. So this money is going to go into the bank, like we've said, and then we go to sundry accounts, because we don't have column for there's interest income. So you're going to have interest amount, which is 360, and the details, it will be interest on current account. Interest on a current account, that is interest income that you're going to earn from the bank. That is interest earned from the bank. So hope we are together on that. That is question 3.11, and it is done. So now let us go to 3.112. So let us go to another question, 3.112. As is 3.1 3.112 is about 3.112 is debtors journal. We are to do debtors journal. So we are going to do debtors journal. So as we are on debtors journal, the rule under debtors journal is what records credit sales only. That's the rule for debtors journal. It records credit sales only. Remember, cash receipt general rule was to record the money that we received, cash, the money that we received by cash. So debtors journal is about recording credit sales only. So understand that very well. So understand that very well. So now we are under that, and if you can now go to on the transactions, as we have said, the first transaction is about only cash receipt journal. But if you go to transaction 3, bought trading stock from Aussie traders for 4,900. And then transaction 7, goods sold on credit now. As we have said, it records credit sales only. Goods sold on credit to J. Gallis for 2,760 and cost price is 1,840. It is given, as you can see. So now we are going to say with this one, we are going to have what? J. Gallis now. We're talking about J. Gallis, where we are going to say we sold goods to him costing how much? 2,760. That is the cost price again. That is a cost price. That is selling price. Sorry, it is a selling price. This one is what? Selling price. This is selling price. And then we want to know the cost price, and we are given the cost price of 1,840. So these are already calculated. These are already calculated. So we have said these do affect our debtors journal. So we have said here, we are saying these do affect our debtors journal. So we have DJ, debtors journal. Also we have now as Shamsi, 7,200 cost, and for the cost price is what? 4,800. So we sold goods on credit to S. Jalis as well as S. Shamis. So S. Jamis, the selling price is 7,200 and the cost price is 4,800. So now we are going to say for S, let's say for S Shamis, S Shamsi is how much? 7,200 is our selling price. This is a selling price. What about the cost price? The cost price is how much? 4,800. 4,800. So DJ shows selling price as well as cost of sales. So that is that. So now let us see how, let us go straight to our answers. So here is our debtors journal. Here is our debtors journal. As you can see, we have this document number 103 on the 7th. We sold goods on J. Gallis for how much? 2,760. So it shows under sales, but the cost of sales was given, it was 1,840. And we also, on document 104, we sold also on this data as Shamis for 7,200, and we were given also the cost price for 4,800. That is how you just show this. So hope we are together on that. So we are done. We are done with what? With 3.12. 3.12. We are done with it, and we are to calculate 3.13 debtors allowance journal. So now we are to be on debtors allowance journal. So Let us be on debtors allowance journal. So let me just rub. So now we are on debtors allowance journal. So we are going to look at the transaction that do affect our debtors allowance journal. We're going to look at the transaction that do affect our debtors allowance journal. So that is very important. So we know when you talk of debtors allowance journal, we talk of where the goods are returned. Where goods are returned. So the rule for debtors allowance journal, it records returns from debtors. This records, let's get that straight. It records, that is its rule, records returns from debtors. It records returns from debtors. That is that. Get that straight. That is the rule of debtors allowance journal. So that is that. So now let us attend to it. So now we can see we are going to look at the transaction that talks about or do affect debtors allowance journal where the goods were returned. So you can see on the 10th we have that, and also on the 23 we have where there are returns of those two transactions. So let's first start by the one on the 10th. On the 10th for as Shami. As Shami returned goods with cost price of 800, credit note was issued. So he returned the goods for 800. That cost how much? 800. So the cost price now is, the cost price is 800. So now we don't have selling price. No, we need to have selling. We need to have selling price as we have what? The cost price. So meaning to say now, we are going to say for us to get selling price is cost price, the markup. Selling price is cost plus markup. So what is our cost price is 800 and our markup, remember, is 50%. Is 50%. You remember it was given, if I'm to remind you, this is the 50% that we're taught about. So now we are going to say 800 plus 50%, and that will give us 1,200. That will give us 1,200, and 1,200 will be our sales. So meaning we're going to say sales is equal to 1,200, and cost of sales is equal to cost of sales is equal to 800. So that is that. So like I've said, we also have the transaction on this one, it was for 10, that is on the 10. Then we are to attend to the one on the 23. We also have a debtors allowance journal there. As it says, credit note issue to H. AMLA of how much? 675. And the cost price is 450. So these are already given. No need for calculation here. No need for calculation because we are told that our sales is how much? 675, and our cost of sales is how much? It's 450. So these are given, no need for calculation. All you can do is to record them. Hope you understand. So they are given. They are given. So all you can do, you can go to our answers and then just see how they were recorded. We can just go to our answers. That is 3.13. So remember that it was on the 29, document 29, as well as document 30. So it was, the date was on the 10, and this is our data, who returned the goods, which we have calculated the sales, you can see, and the cost of sale that was given is what? 800. So because it was given, that is why there's no marks. On 23, we remember H. Alma also returned the goods, This is the debtor who returned the goods to us, and then the selling price of those goods was 675. It was given, as well as the cost at this much, 450. So that is that. This is how we were to record them. So also, let us go to question 3.2. Let us go to question 3.2. Question 3.2 asks, mention 2 measures that should be implemented by business before they can grant credit. Before they can grant credit. This is our 3.2. This is our 3.2 question, where you say why those credit checks. It says, mention 2 measures that should be implemented by business before they can grant credit to customers. So they have to ensure that the customers can pay. Ensure customers can pay. They have to ensure that customer can pay. Ensure customer can pay. Before they can grant credit, ensure customer can pay. That is very important. So that is that, to avoid bad debts. Okay. Business have to make sure that they avoid bad debts. So that is, how are you going to do that? Proof of income. The proof of income can show affordability, that you can be able to pay. Also, the credit history is an example, show reliability that you pay your creditors. So that is that. So let's quickly go to the answers that are given there on 3.2. As you can see, here is our 3.2 for answers that are given. Mention 2 measures that should be implemented by the business before they can grant credit. It says salary advice slip. That is a proof of income that we have talked about. It shows affordability. This shows what? It shows affordability. It shows affordability that you can pay. Proof of residence or address where you will be found. That is that. Contact details of family or friends. So if you cannot get through you cannot get hold of you, then we have to have your friends or family that you can now ask about where you are and stuff like that. Bank statement, and then as well as a bank balance that shows that you can pay. Your identity document, your ID, your credit reference, your credit history, like I've said, it's going to show your reliability, also your email address. So this happens before we can afford, before we can be given what a credit as a customer. So that is that. So 3.3 was say, name 2 ways in which you can encourage debtors to pay their accounts on time. So this is that, and here it is. 2 ways in which you can encourage debtors to pay their accounts on time. That is when you give discount to prompt a payment. So give discount, that is when they can just pay. That can enable to or attract them to pay on time. Charge interest on overdue accounts. So that will also make them to pay on time, because they will be trying to run away from this overdue or interest. Send statements regularly by reminding them that they are to pay their account. Also conduct data by phone or email or WhatsApp. So that is that. So hope you're together on that. So now we are to move on to question 4. We are done by question 3. Let us move on to question 4. So here we are on our question 4. So question 4 is the interpretation of ledger accounts and internal control. Interpretation of ledger accounts. 4.1, you are provided with accounts from the general ledger and the debtors ledger of Mbambo Traders. So the business uses fixed mark of 100% on cost. So required now, 4.11, complete the account given by filling in the missing details. A to O on the answer sheet provided. Balance the accounts correctly after completing the missing information in the accounts on the answer sheet. So that is that. Note, show all your calculations in order to earn part marks, for you to earn the marks. 4.2, internal control. Suggest 2 internal control measures that the owner could introduce to ensure that trading stock is well controlled. So that is that. So that is that. So here is our general ledger for Mbambo traders, balance sheet section, accounts, balance sheet account section, and then we are having a trading stock. So remember, we asked to complete the account by filling in the missing details. By filling in the missing details, A up to O. So now let us start. As we are starting with trading stock, we can see here it's A. Now we want to know what is missing here on A. You can see that what is missing on A is what? A balance brought down. So here what is missing is a balance brought down. So we are saying what is missing here is BD, balance brought down. So we know that balance brought down. This is the opening stock. This is the opening stock. So we have to show that this is a balance brought down. This is the opening stock. So in the ledger accounts, the first entry is always balance brought down. So we write BD because the amount 20,000 is brought from the previous period. So we have to write this. So hope we are together on that. So also we have the missing now on the 31st of what? Of B. So what are we to write on B? So as you can see, this is a cash payment journal of 14,000. So cash payment journal, creditors journal purchases on credit. So now we are to write what here? We are to write the bank. This is what is missing. So even though it's recorded in cash payment journal, the double entry affects what? The bank or creditors. So in this format, we are going to label it as a bank to show financial source. So this is bank. So hope we are together on that. So now we are to move on to C. As you can see here, we have a debtors allowance journal of what? Of 1,000. Debtors allowance journal of 1,000. So it means here we are talking about cost of sales. What we are to write there? We are to write cost of sales. Cost of sales. That's what you have to write. Why? Because you are talking about returns. Once you are talking about debtors allowance journal, we are talking about the returns. We are talking about the returns. When stock leaves the business, it reduces what? The stock. So any reduction linked to goods is equal to cost of sales. So that is where we are to label it cost of sales. So that is the correct answer. Now coming to on the 31st, on the credit side now of our trading stock, now we are to fill in the missing under D. On D, whereby we have 15,000, and you can see that is going to be cash receipts journal. The correct answer there is cash receipts journal of this cost of sales. Why? Cash receipt journal, that is a cash receipt journal. This record cash sales. So when goods are sold for cash, it means now we are going to receive that money. So we are saying when goods are sold for cash, money comes in. When goods are sold for cash, money comes in. So that's why I label CRJ, and the description is what? Cost of sales. The description is cost of sales. So now coming to E now. We are coming to E, where we have this debtors journal. We have debtors journal there. DJ is equal to Debtors General, credit sales. We are talking about what? Credit sales. We sold our goods on credit for 13,000. So goods are sold on credit, stock leaves. So once we sold, it means our stock is going to leave. So even though Debtors General shows selling price, in stock account we record the cost. So hence you're going to label it cost of sales here. Cost of sales. That is that. Like I've said, even though Debtors General shows selling price, but in a stock account, we record it as a cost of sales. Hope we are together on that. So these are the answers. These are the answers. So hope we get straight to what was expected. So we can even go to our answers here. Question 4. As you can see, this is the balance brought down that we're talking about. This is the bank, cost of sales, and this is CRJ as well as cost of sales. So now we have to have a balance carried down as you can. We have to make sure that we balance that. So we know when we add 20,000 plus 14,000, you're going to get this much. This is the bigger side. And then we're going to say that 5,000 minus what? The total of 15,000 plus 13,000, and this will give us what? 7,000 as our balance carried down on the credit side and balance brought down on a debit side. So that is how we do them. So now let us quickly go to debtors control now. Let us quickly go to debtors control. Let us be on debtors control now. So on debtors control, we are going to now look at F. Now we are going to look at F. F, we have what? Debtors journal. We have debtors journal now for goods that we sold on credit. So for F now, we are going to say debtors journal records credit sales, goods that we sold on credit. So when you sell on credit, customers owe you, and that increases what? Debtors. So it means now, what are we going to write here? We are going to write sales because we are saying debtors journal is about the goods that we sell on credit. So it says you're going to sell on credit. So that is why here we are to have what? Debtors journal. How much are we going to sell on credit? So now we are on G now. We are here on G. How much are we going to sell on credit? This is where a calculation is needed here. This is where calculation is needed here. We have a markup of on cost of 100. If you can still remember, this is what I'm talking about. This is what I'm talking about. The business uses a fixed markup of 100% on cost. So that is why I'm saying here the calculation is needed here. The markup is equal to, we are saying markup is equal to 100% on cost. That is that. So selling price is equal to, our selling price now is going to, I'm saying selling price is going to equal to 2 times cost. 2 times cost. So from trading stock, which is this one, from trading stock, we have cost of sales on debtors journal part. We have cost of sales from debtors journal part, which is how much? 13,000. I'm talking about this amount, which is 13,000. So compared to selling price now. Now we are to compare to selling price, compared to selling a price. So that is when we are going to say 13,000 times 2, and it will give us 26,000. So meaning our answer for G is what? 26,000. It's 26,000. So debtors must be recorded at the selling price, not cost. Debtors must be recorded on a selling price, not cost. That is where we are not supposed to write 13,000. It's wrong to write 15,000 because debtors are recorded at selling price, not cost. So that is why it is 26, not 13,000. That is why we have to record it as 26,000. Hope we are together on that. Now coming to H now, which is this one. Coming to H. H. Now, what are we going to write here as we are having 21,800? This is the money that we received from customers. We received this money from customers. And so it simply says here we have to write the bank. Because we received that money and the money is going to go into bank. Cash goes into the bank. And their debt is going to decrease. The debtors debt is going to decrease because now we are going to receive this money, cash from debtors. So we are going to label it as bank. So that is that. Now we come into I now. I, we can see now we have this, and then you don't know what is this, and then we have this debtors allowance general of how much? 2,000. We have debtors allowance general. So debtors allowance general, we have said it includes what? Returns or discounts given. Whenever we're talking about this, it includes discount or returns. So now we want to know what are we going to write there. That is very important. I is equal to debtors allowance. So we are going to write, so the correct label there is to write what? Debtors allowances. You are to write debtors allowances. So that is that. So these are our answers that we are expected to give. So these are our answers that we are expected to show. So that is that. So now you are to what? You are to make sure that you balance them. You don't just leave them. You add this and you add this and then try to give what? The balances. So as you can see, this is our debtors control. And you can see that this is the F that you got, and then this is the 26,000 that we calculated, as well as H, where we say the answer is cash receipt journal. And here you remember we have said is debtors allowance. So you are to add this and get the bigger side, which is 38,800, and then you subtract it from 18,21,800 plus 2,000, and then you subtract the amount from 38,800, and it will give you what? 15,000 as our balance carried down and 15,000 as our balance brought down on our debit side. So that is that. So now let us go to let us move on to debtors allowance now. Not debtors, our debtors leisure. So now we are to be on debtors leisure of Mambo Traders. So that is that. So we are on debtors leisure. So on debtors leisure now, as you can see, on August 1st, we have discount rendered. So now we are to give the balance. We are to give what? The balance. So that is that. So if we can go back and try to see how we are going to do that and how we are going to treat that. Let's go to debtors leisure. Let us be on debtors leisure. So we are told that after paying, 500, which is this amount, the balance was 700. This is what we are told with this given amounts. We are told that after paying, the balance is equal to 700. So now we want the opening. So we are going to say our opening now is going to equal to 700 plus 500, which is going to equal to 1,200. That is the opening balance that we are to write here, 1,200. So this is our opening balance. That is the balance now. Now coming to another missing, which is now on the eighth receipt. That is we are to now tell what is this K. What is this K? As we are told that we received it here, it is on the credit balance. So this is a cash receipt journal. That is what we are to write here. CRJ, cash receipt journal, as our volume. Why cash receipt journal is a cash receipt journal used when debtor makes payment. This is what we received. This is what we received. When debtor makes a payment, because we're talking about debtors here. Remember, your own debtors. So the debtors paid. We receive this from a debtor. So once we receive this, this is going to go into cash receipt journal. So that is why our volume is what cash receipt journal. This is going into cash receipt journal. So receipt must be recorded as CRJ. So that is that. Now coming on the 11th, invoice 123. Now we are to tell what is this I. What is this I? So we want the folio as well as where is it? What are you going to write there? Here on the debit or here on the debit, what are we going to write? So first, let's focus on I, not M. I, we are going to have, is going to be DJ. Here we're going to have debtors journal. Is debtors journal. Why? Debtors journal used for credit sales. Debtors journal used for credit sales, that is invoice issued. So invoice must be recorded as DJ. So now if we are saying this volume is going to be debtors journal, so now we come to M. M is equal to how much? As we are told that now, we are told that the balance after the invoice is this much, 2,650, as you can see. So previous balance was how much? Was 700. This one. So the invoice now is going to equal to 2,650, which is this one, 2,650 minus 700. That is a previous balance. So this will give us how much? 1,950. 1,950. So that is that. 1,950. So remember, we have said I is DJ, debtors journal, used for credit sales when you sold our goods on credit. So now we need to know the amount, which is 1,950. 1,950. So that is that. So on the 18th now, on this date, now we have to know the N under details, whereby we have debtors, allowance journal, and now this 800 on the credit side. So what is the detail for this? So the details there is a credit note. This is what credit note, because we are saying when goods are returned, the credit note is issued, because we have said debtors allowance journal. That is when we give, that is all about discount or returns. Whenever we see this debtors allowance journal, think of the goods that are returned or the discount that is given. So for goods that are returned, we are issuing what? A credit note. We are together on that. So now we are to be on O, which is the last one. Um, Now we are saying after the returns, we have this 800 and our balance is this much. So we returned this 800. So we are going to say 2,650 minus 800. Then we get what? 1,850. So we have to give the amount here under balance. It's 1,850. And we are done. So that is that. So this is all what we have done. So this is short here as well. As you can see, the 1,200 that we have calculated when we added these two, and also the 1,950 that we get, also the credit note that is issued when the goods are returned, and then this is the balance that we have. So thank you very much for your time. Um, Let us use this presentation as to prepare for our test that we are going to write and as well as for exams. Thank you.